Hello guys, welcome back to another lovely trading video. In this one we're doing a whole strategy video from A to Z, everything I look for, everything I do, everything related to the day trading strategy I use and post recaps on every day. So the first thing you'll want is a 1 day 1 minute chart, 4 hour 180 day chart and a daily yearly chart. Then once you've got that, ideal to have them all in a line because then you're easy to access all of them. However, if you don't have a large enough screen or whatever to do that, you may have to filter them a different way, but those are the three main charts that we will use. Then when you have those three charts, the daily and the 4 hour will have the same indicators, but the daily, the 1 day 1 minute will have different indicators. So to get straight into it, we will show you the indicators for the 1 day 1 minute. Also, if you want to skip into different parts of the video, there will be timestamps below, and everything from stop losses to entries and all of that will be covered in this video. So to start off, for the indicators on the 1 day 1 minute, I use these indicators on screen, a 9 EMA, 20 EMA, 50, 200 EMA and a VWAP. You can then also add on a high-low close, which this basically doesn't need it. I just like to have it on there. Don't really use it for small caps either. It's more when I'm looking at large caps. But this will be yesterday's close, yesterday's close, yesterday's high, and the red line will be yesterday's low. So that's all that does, but you don't need that on. Doesn't really affect the strategy all that much. And then volume and RSI are good to have on, but again aren't super necessary. Volume actually is a bit key because you want to make sure it's trading at least a few thousand a minute. But to add these on, depending on your broker, it may be a bit different. But for Think or Swim, which is what we use, you need move average exponential. You just add that on, and then you can adjust 9 whatever color you want, and then do the same for 9, 20, 50, 200. Same with VWAP, you just add that on. We leave default settings. High-low close, if you're using Think or Swim, you can just download a script on from online, but that's all super simple anyway. Now this is the one for the 4 hour and the daily chart, and for this I think you need to be on Think or Swim. I don't believe other brokers provide this indicator, or at least not as effective as Think or Swim. So if you're using something like Interactive Brokers, I think it does kind of have it, but it's just not efficient. But you can try it out if you don't have access to Think or Swim, if you're not a US resident. But for the same kind of thing, to add these on, you just search up standard def channel. You want to add this 7 times. So you just go click, do that basically, so 7 of these pop up. Then when you have that, you just go into each of these and you want to adjust it to these exact numbers. So you'll see here, you just edit this deviations number to these ones in order. And then what these basically do, what I will do is get rid of most of these just to make it clear on kind of what they do. So we will leave it like that. And you'll be able to see half deviation are these dashed lines here, and this one that says 1 is these first deviations. These half ones, the ones that say 0.5, you don't need, but they can sometimes be good indications. So for the dashed ones, you want to just edit the upper and lower line, pick whatever color you like, and then just changed it most likely to a dash one because we won't trade off these levels. Then for the whole deviation, so the ones that are like a 1.0, 2.0, 3.0, 4.0, you go into here and you will change the upper and lower line to a color. You don't have to change the style because you want that to be a solid line. But that's basically all you have to do. I'll quickly do 2 examples just to make it clear. So we've already got the 0.5, 1.0. So then we need to add on the 1.5. This is a half deviation, so we change this to a dashed line on both of these. And then on this one, we want this as a 2.0, that's default, but if it wasn't, you would just go 2. Or you could literally just put 2. Change this to whatever color. So let's say for this example, blue. Apply, and then you'll see, if we zoom out, we get these lines. So half deviation, first deviation, another half deviation, full deviation. So that's basically all you need. And then we'll load back into what I currently use. And then we do have the same thing, high-low close. You don't need to add that on. You don't actually really even see it on these charts, so you don't need to add that. RSI, you don't need it again, but can sometimes be handy, especially if you used to trade that using your own strategy before. But that is it for the setup. So now we will go on to the scanners I use to find the stocks and the stocks that you will want to trade. So for this, we use two sets of scanners. So if I go over to scanners, we use two separate ones. First one being a gap scanner, and you probably see this quite commonly. You can even search these up on YouTube. A lot of YouTubers will stream these from trade ideas, and these will provide you like the biggest gappers on the day. You may want to add in some filters to this, so I personally have at least 150k volume in the day, because if it doesn't have 150k volume, I don't want to trade it. Then I don't really like to trade anything below $3. For my own testing, I found that trading stocks below $3 wasn't as profitable, so no point in me trading that. And then a minimum gap up of at least 5%, because you don't want about 1,000 stocks popping up on this list. You want to only have 100 or so. And then we will use this as well in the future. And then I also have a limit of 30, because again, through testing, I found that over $30, it just wasn't really as accurate, because the stop loss we use didn't work as well on the higher price stocks. And then the momentum scanner is also very important, and usually is where I get most of them from. The only time I use the gap scanner is if this one isn't showing any stocks. So it's kind of the same setup of a value of at least $3 to $30. A bit more volume on this. I look for at least 250,000 shares of volume in that day so far. Same thing of it being gapped up 5% on the day. The only difference with this is you add in a price change, and what this formula here basically does, so you can just copy this if you're on Thinkorswim, but basically all this means is the stock is up at least 2% in the last 10 minutes. And then it also fits the criteria of our gap scanner of being at least $3 to $30 and has already gapped up at least 5% on the day. So it's kind of just an extra filter added onto the gap scanner, so you're not left with 100 stocks, you're instead left with maybe 10 to 20 stocks. So now we'll go on to the actual strategy, and we have two. We have both a short and long biased part of this strategy. So we're going to start off with the short bias strategy, and so we'll go through exactly what we're looking at and all of that. So to find this stock again, you can either use the gap scanner or the momentum scanner intraday. Then all you want to do is come over to the long-term charts and place your support and resistance. You could quite easily probably trade off this first deviation. I don't personally do it. When doing my own testing, it didn't seem to be as effective as the other ones, so it's just a way to for me to kind of increase the accuracy of the strategy by not trading this first deviation. So what I do is come over to these charts and then look for the blue line, or whatever color you put it as, the second deviation, put a line there as a resistance. Same thing on the one above it, in this case the green one, and then if it comes up to the red one, we also place a line there. Same thing on the daily chart, you place those same resistance lines. You only place these lines though on the short bias way when it's the first time coming into this line. So obviously it's a Saturday, we can't go and trade the market live, so we're going to pretend that this day hasn't happened yet, because that's how we're plotting the resistance. So pretend market hasn't opened yet and we're waiting for it. What we're looking to do is for it to come into these deviations. So in this case, it hit it pre-market, so we wouldn't trade it, because when it hits a deviation, in this case here, you would look to short. However, it hit it pre-market, so we don't retrade it as the market opens, because that will reduce the accuracy. So this wouldn't be a shortable stock on that day, because it's already hit all the deviations we would look to trade. So going on to the ticker WORX, we can see that it's coming into these deviation lines. So again, what we would do is place resistance lines at each of these deviation lines. We can see they're not too far apart between the charts. That just means it doesn't move that much pre-market or after hours, but that doesn't affect the strategy in any way. So once you've placed all these resistance lines, you then will come over to the 1 day 1 minute chart and look for entries. So you only trade it when it's the first time hitting this deviation. As you can see, it didn't touch it pre-market, so we are fine to trade this short bias. As the stock comes up, you can see at this point the stock's only $2.85. we wouldn't trade that. I don't trade anything below $3. So for this, I would have ignored. However, it keeps pushing up and it comes into the 325 area where we would look to short, because this is our third deviation. So if we zoom this in, you can see we would have a short area here, and this is exactly where we would look to short. Now we would have our stop loss. Now you can kind of adjust this and put this where you prefer, but I have a rule of thumb: no more than 30 cents. On the max case, you will have a stop at 5.58. However, on a $3 stock, you probably don't want to use all 30 cents because you obviously need to make that on the downside. So on a stock like this, I'd probably be looking to maybe do more around 15 cents. So in this case, you still want to use kind of a psychological level. What your psychological levels are the 25 cents, the 50 cents, 75 cents, and whole dollars. So this is a psychological level at 3.25, psychological level at 3.50, 3.75, and $4, and also $3. Those tend to be key levels where stocks will get sharp movements. Asked to place a stop above that kind of whole dollar, we would have to be risking, even if we did 3.51, 24-25 cents, which is fine. You can do that, and most of the time that is what I will do. However, if the stock is as extended as this, I tend to make it a bit tighter because we know it's most likely going to bounce a bit earlier. So in this case, my stop, and I think I did trade this, and I put my stop at 3.46. So that's where my stop is, and I'd be risking 18 cents. So a 1-to-1 risk to reward, which is where you can lock in some profits, would be 18 cents. Let's see what 18 cents is. Right here. So you can see, didn't quite make any money here, came back to break even, and then we would have got our 1-to-1 risk to reward. What I would do at that point is take off half the profit. So let's say we're in with 1,000 shares. I would lock in most likely 300 to 500 shares at this area, move my stop to break even, and then look for a 2-to-1 risk to reward on the rest of the shares. In this case, we would have locked in 300 to 500 shares at a 1-to-1 risk to reward, and we would have stopped out break even on the rest of the shares at this level here. There's only one other rule you need to consider when trading this, is if you're shorting, you need to look for two things on the 1-day 1-minute chart. Firstly, that is above VWAP. You don't want to be shorting anything below VWAP, because VWAP is considered fair value. So you want to be shorting it, selling something you don't own, above fair value, so you are basically getting a good price. The next thing you want to look at is the 9 EMA. You want to make sure this is quite extended. By this, I mean here. Let's go here. You can see it's literally touching the 9 EMA. It's very close to it. However, coming over to here, where it actually hit our deviation, you can see when it hit it, we were roughly around 4.5% from the 9 EMA. 9 EMA is a key one we use because it's a commonly used EMA that day traders use. So at this level, people are waiting for it, and if they see it extended, people are more likely to lock in profits or short. So to kind of recap it, plot your resistance on the 4-hour and the daily charts, and only trade the deviation if it's the first time hitting that deviation on that day. Then on the 1-day 1-minute chart, you're looking for the stock to be extended from the 9. I would usually say around 2% is what I would consider extended, and when I would take the trade, and then you just need to be above the VWAP. So for the long bias part of the strategy, we can go onto the ticker AMY, and here we get a good example of how it works. So you kind of do the same thing as a short bias strategy, where you place your resistance lines on all of these deviations. So you come over to the second deviation, third deviation, and the fourth deviation on the 4-hour, and you do the same on the daily. Second deviation, third deviation, fourth deviation. We avoid the first deviations because they just don't tend to have as high accuracy. Once you have all those resistance lines placed or support lines placed, you then come over to the 1-day 1-minute. There's two things we look at. Firstly, if you're trading it long, what you want to see is that it's hit a high deviation before you trade it. So by that, I mean, you can see we have this support line here, and it is a good long area. You can see it's hit it several times throughout the day, and that doesn't matter as long as it's touched a higher deviation. And you don't want them too close. So like this one, you got the $5 deviation and the $4.75 deviation very close together. So you won't count that as a touch. You instead wait for it to touch this higher deviation, which is just more of a distance away. If this deviation was here and it hit that, that would count. But 25 cents isn't really far enough away to kind of really count it as a bounce. So pull back, touch this deviation, came back. Now we've touched this deviation. So now we're looking for a long bias trade. You wait for it to pull back, and you'll see we're looking for two things on the 1 day, 1 minute chart. And that's, if we're going long, we want it below the VWAP. Reason for this is VWAP is kind of considered the fair value on the day. So if you're buying the stock, you want to get it below fair value. So you're basically just getting a good price and you're kind of taking on less risk. The only other thing you're looking at is that it's extended from the 9 EMA. And by this, I'll be able to show you here. When it comes into this $5 deviation, you can see it's very close to this 9 EMA. So we wouldn't trade this because when it's touching this 9 EMA, you can see the candles are very close. In this case, it is around 2.5%, but all the candles are touching the 9 EMA. So we wouldn't really want to trade that because it's kind of just hovering on this 9 EMA and is struggling to get away from it. What we will do is then wait for it. We wouldn't trade this. We wait for it to come down to that next deviation, in this case, 477. And we look to see if it's below VWAP. Yes, it is. Has it touched the above deviation? Yes, it has. It touched it over here. And then the only other thing we're looking at is it extended from the 9? And you can see here, yes, it's just kind of very close to the 9, always touching the 9. It's not something we're looking at. We're looking at it to start getting extended. But you can see once it broke through, we started getting some gaps between the 9. That's what we like the look of. And then you can see the candle that actually hit our deviation was quite extended. So we can check here, it's around 3% extended. That I would consider extended. I usually say anything above 2%, I would count as an extension. So this would be a good long area. Then you want to have a guaranteed stop or like a max loss. And in my case, I never risk more than 30 cents. Doesn't mean I'll risk 30 cents on each share, but it means I can risk a max of 30 cents. So I personally risk a max of $200 a share. So all I have to do is come over to this calculator, put in $200 divided by, let's say if I'm risking 30 cents, divided by 0.3, I can trade 666 shares. But let's say on this case where we wouldn't risk 30 cents, on this kind of trade, we would probably have our stop. So the max stop we could have is 448. On a $4 stop, we're probably not going to risk all 30 cents because it just doesn't really make as much sense. So we would probably look for more of a level of 464 would personally be where I put my stop. And I think I did trade this, and that is where I put my stop. So 464 is where I would have my stop. So we're risking 14 cents on that trade, I believe. Let me just double check. And if you're using Thinkorswim, it will tell you kind of like right here. If you see I hover over, it shows you that it's minus 2.9% or 14 cents, which is good for us. So all we have to do is we're risking $200 a trade for myself. So 200 divided by 0.14 is 1,400 shares is what I can trade on this. So if I'm risking 14 shares, I then have a first profit target of 14 cents. So where's 14 cents? Right here. So when we hit this 14 cents or a 1-to-1 risk to reward, I'd most likely lock in around 30 to 50% of our position and then move my stop to break even. So here, let's say we locked in around 500 to 600 shares, and then what we would have is a move to break even. So on the rest of our position, we would have a break even stop back at that 477. Then the same kind of example here. I didn't quite hit it, but the deviations may have been different in the live market. So let's just say our deviation was at this 438 mark. The same kind of thing, we are extended from the 9 EMA, we are below VWAP, then we would be looking to place our stop. again, you can risk up to 30 cents. I wouldn't on a stock like this because we don't need to. So I'd be looking at that psychological level of 4.25. For psychological levels, you have the 25 cents, 50 cents, 75 cents, and a whole dollar are all psychological levels, and usually areas where a lot of volume will come in, and you'll see it move strongly in one direction. So if I know that the psychological level is there, I'll look to place my stop a tiny bit below that, just so we hopefully would not get stopped out. So in this case, I'd probably have my stop around 4.13 to 4.19. Our stop would have been here, and if we're risking 19 cents, again, we need to work out how much size we can do. So if I'm risking $200 on the trade, I do $200 divided by how much I'm risking. In this case, what was it, 19 cents? 0.19, and I can trade 1,050 shares on this. So I get in with 1,050 shares right here at 4.38. Have my stop down here, so no matter what I get out of the trade at that zone. But I'm looking to lock in some profits at a 1-to-1. So when we're up 19 cents, I'm looking to lock in at least 30 to 50% of my position. So here, right here, we would have locked in profits and moved the rest of our position to break even. So no matter what, this is now a winning trade by at least $100 or so, around that area. Then obviously we have our stop at break even, but we're looking to get a 2-to-1 risk to reward on the rest of our position. So in this case, we would be looking at 19, so 38 cents. And this one actually I think is going to have to give us a great example. Yes, it will. Okay, that's good. So 38, you can see, is right below this deviation. So that's good in our sign because we want to be locking in profits before it touches this area, because when it hits this area, there is a high probability that we could continue lower, or we get a strong breakthrough, as in this case. But it's always good to lock in the majority of your profits before touching this line, because you want to get kind of the best bang for your buck, and it could quite easily just continue down. So when I'm looking at this, I see, okay, our deviation's at 477. We have a 2-to-1 at 476. I'm most likely going to lock in profits out at 474 on this. Main reason being the psychological level of 475. So we just want to make sure we lock in that tiny bit before. So around 74, 73 would be a good area to lock in the majority of your profits. Closing kind of statements on the strategy. You can't just adopt the strategy for yourself. You might not want to hear it, but it won't work. Main reason being is people psychologically trade differently. Some things I can handle, you may not be able to handle. Some things you handle, I wouldn't be able to handle. So you can test this in paper or back testing, and you will see it has a good accuracy. It will work. But there'll be some things you might not like with this strategy. You might not like that you could get stopped out in one candle. If you're risking 30 cents, a stock's moving heavy, you could get stopped out within 30 seconds and lose that $200 in 30 seconds. Some people don't like that. Would rather go with small size, risk a bit more, maybe 50 cents, and have a higher profit target. So those are the kind of things you would have to figure out for yourself. This is just my personal strategy that I use on every day trading recap that you see on this channel. And even myself, I make adjustments to it throughout the years, as you would have seen. If you watch the day trading recap I did in around February, it was only shorting. And the strategy was quite different to how it is now. So strategies do change. You'll definitely make some adjustments yourself. Over time, you'll start seeing it and you will make your own adjustments. The only thing that may decrease your accuracy, and it's more if you're just brand new to trading or never kind of traded in this way, is the charts may react differently to how you used to trade. So if you used to trade large cap, stocks react differently. If you were buying at different levels, stock reacts differently. Over time, you start seeing these patterns, and this is the only bad part, but it's the same with any strategy. It's you can't rush it. It just takes time trading it in a live market to see how these stocks react, and you just start to pick up on characteristics. For example, me finding the waiting for it to be extended from the 9 before taking the position. That maybe took me 2, 3, 4 months to figure out, and it was just a common pattern I kept noticing on losing trades, that they just weren't extended. So you'll definitely make some of those over time by yourself, no matter what strategy you trade, if it's this or a completely different one. But that's basically it for the strategy. Everything should be quite simple. Again, timestamps below if you want to go back to any area of the video. But I hope that video helped. I hope you enjoyed it. I hope to see you in some other videos, because I will do recaps. If you want to kind of see it more on a daily basis, you can check out those recaps and they should be quite helpful. I'll do another one of these in the near future on the swing trading strategy. If you prefer swing trading, it's quite similar to this, but we do it on large caps, and yeah, they're swing trades instead of day trades. So I hope you enjoyed the video. Hope to see you in the next one, and that's it. Peace.